There's a couple different ways to use them. A lot of traders use them to try and trade in between, buy when it hits the lower band, sell when it hits the higher band. That's one way to use them. Another way
Harlan Pyan, are you there, hiding in the background?
I am. Yeah,
we heard the ringy dingy, and it's a circus in town for the shorts here right now, Harlan. That's what I got to ask you, because, man, this has been an incredible windfall here if you were short this market just even a week ago. What's your thoughts here? Are we oversold?
Well, that's a relative term, isn't it?
Yeah, true. Very true.
When you have a very fluid environment, it's kind of hard. It's very news driven. I'm going to take what Joel said at the top of the hour. I could not agree with what he said, any more than, gosh, because I'm thinking exactly the same thing. You got to watch these lows. You have to watch these lows. I mean, we came up, 40 points on the S&P off the lows.
Yeah.
So, that fast, you're going to come back down and look at it. And, when you start to watch the daily chart, watch the lows of the day. And, if those lows hold, that could be interesting. I mean, you talked about Google. Well, take a look at Google with an L down at the May lows. You hit a low, you bounce, and it came back to the scene of the crime. We got to watch that. That's kind of what you're looking for. So I'm total agreement with what Joel said. Took the words right out of my mouth. You start looking at double bottoms. When this thing decides that it wants to do some sort of a bounce that sticks, what you saw yesterday in some of the biggest names, you're probably going to see that again. You see how fast some of these names took off and ran.
Yeah.
I guess if you're a day trader, hey, that's great. You buy that fear, and by the end of the day, you could have been out by the end of the day. You had a huge day. Obviously, it's not for your average type of an investor to trade that kind of climate. You literally have to be glued to your screen for that. So, I guess I'm looking at it as I'm watching that 1820 level. Wouldn't surprise me to see an undercut just to shake the tree because they like to. But, I think the risk here, on the short side, yeah, we are extended to the downside in the short term. All right. But, the risk here is the powers that be, or somebody's going to come out and say something, and, away we go. Now it's damage control. That's kind of what they're looking for. So, what if we what if we finally say, all right, we're going to follow Great Britain and France's fast on their feet thinking and not allow any of those flights into our country? That's what they should have did in the first place, mind you, but that's beside the point right now. That's the market's looking for something. It's looking for something like that. It's looking for, hey, we're going to get serious about this. And, up to this point, we've seen nothing serious about this. As far as Frontier Airlines, did you guys hear about their plane?
No, tell us about that. FTR. Not FTR.
They're cleaning it, and it's going to be ready for service in 3 days. Does anybody want to ever be on that plane again? They should just put it on autopilot and sink it into Mariana's Trench.
Wow, yeah.
Really? You're going to clean the plane? Is that your answer?
We're going to clean the Ebola disease out of there.
What's a symbol What's a symbol on that, Harlan?
It's Frontier traded. Because I just blurted out. You said Frontier, and I was like, I said, it's Frontier Communications. I was thinking, though, I don't know if it's traded.
No, it's part of, I think it's part of Republic now. Do you know where Republic Airlines is?
No.
Okay. Well, anyways, Harlan, the spoos are dropping here again.
Right now.
Yeah,
really
right
killed.
Here, right now. Did you get stopped out at any long-term positions, Harlan? I know you like to lock things.
I did.
In. Yeah, you did. And are you flat now, or how you looking?
Yeah, well, flat. I'm about 15%. I got 3 positions, 5% positions, and they're giving me. I'm getting a little cuts and scrapes and bruises. But when you're sitting 85% cash, your positions are 5%. You literally, with a 5% position, let's say, theoretically, to show you the power of trade size risk management, if you have a 5% position, you wake up one morning because of a news-driven event, you're down 20% on that one position, you know what the impact to your overall portfolio is? 1%. So, using that framework, you really can't get beat up too much, sure, on an individual issue, but if you're managing a portfolio, that saves you all the time.
Don't put all your trading eggs in one basket.
Never.
So that's
Absolutely.
85% of your day trading portfolio. Are you talking about? Or are you talking about your
overall portfolio?
Wow.
See, what we try to do is whenever we take a position, we try to stick to a guide of no more than 5% of our overall portfolio in any one issue. That way, when you have things like this happen, sure, you get a few bruises, maybe a black eye, but you know what?
Yeah.
You never end up in intensive care.
Yeah.
And why do you do that? For times like we're seeing right now.
Yeah,
So,
because overnight risk can happen fast here, and that's what Doug Cass always
Right.
says, risk happens fast, and he's exactly right. I mean, this Ebola thing came out of the blue, really, a month ago. None of this was a concern, and now all of a sudden, it's talked about continuously on the news everywhere.
right. It's called managing the unknown. Understanding what you have control over and what you don't have control over go a long way towards designing a portfolio.
But on the flip side, Harlan, everyone freaked out in August about the with the Russia and the Ukraine, and the market just shrugged it off. I mean, looking at a kind of scenario like that, I mean, this kind of is happening in the United States and has little different implications. I mean, I don't know. It just doesn't feel like the market is going to shrug.
Well, what's different between August lows and today's market action is you held supports on the S&P. You came down in 1900, and that was a support level as well. As well as a few Fibonacci retracements, if I'm not mistaken. So the technical climate was stronger and it held. But when you start throwing these wild cards out there like this, of course, and coupled with what you said earlier, it's like it's been a good run for a long period of time. So in the bigger context, this is really nothing. Like you had said when you showed that one chart, this is really nothing compared to that one chart you were showing, maybe 15, 20 minutes ago.
Yeah, the last 5-year run-up on the S&P.
Mm-hmm. So, how far are we going? I don't know. I mean, right now, I think sure, there's a lot of risk to the downside more, but by the same token, there's also risk that, somebody comes out and says something and away we go. So, so you've got some really serious risk on both sides of the market here, so tread lightly. There's always going to be something to do at a later date. Why not wait for a time where, if you can't act on your feet like a day trader and watch this thing, why not wait for a time for the dust to settle? But as you had said at the beginning of this conversation, should you be selling your peanuts while the circus is in town? I mean, when's the last time you've seen a market, the S&P in 4 or 5 days go from 1960 to like 1820? It's been a long time. In a very short period of time, that's huge. What did the NASDAQ lose in the last month? Like 10%? Gosh, in 10 months, it's going to be at zero at this rate of acceleration.
All right, Harlan. Zero.
That just kind of shows you how unsustainable.
I'm buying down there, by the way. If we get down to zero, I'm going to buy.
Well, it does show you how unsustainable. Are we going to continue to do that? Go down 10% per month. In 10 months, you're going to be at zero, and then what? Well, then you got bigger problems when you don't even care about the market at that point. But, it just goes to show you, so things are getting stretched technically to the downside. That being said, though, you've got a lot of news-driven events coming. So, that are here. We've got a culmination of, bam, bam, bam. We saw Germany's issues. We saw this, I can't even name them all at one time. It's just like a convergence of bad news, hitting at all times.
Rob Hood, one of your biggest fans here in the chat room, wants your in the chat room, wants your thoughts on a couple issues here. The first one is IQ&T, and Rob's charts are always they're always near the top. They're always getting ready to break
He
out.
looks for those Harlan Pyan charts.
Is that
Rob, I think he does.
I think we should call this the Rob Hood Show.
All right, what are you thinking here?
You, we love you too.
What is this?
I don't know. It's kind of the last month or two. It's just been kind of going sideways here. I think you want to key in on the names. Look at the names yesterday off the lows that put on major points. That's really kind of where you want to hang your hat on. You want to hang your hat on the big index names because when you get some sort of a relief rally, if even for 3, 4, 5 hours or even for 2, 3 days, they're going to move the big index names first. So that's kind of where you want to be versus something that's kind of thin like this.
I mean, this one's kind of holding in here. I mean, theoretically, you had that big whoosh down from the $14 level. You had the slow recovery, some consolidation, Rob. I mean, if you hold 13 here, I mean, yeah, you got a chance, a little bit of a breakout. But just keep in mind, you've been in basically a lower 12 to 13 trading range here over the last month and a half, 2 months, trying to break out over the top end of that range. Probably going to be rough sledding up to the $14 level. Another one.
Draw a line across 13 and a half.
Okay.
If you draw a line on a 6-month chart across 13 and a half, there's a lot of overhead supply there. All of those people that got stuck in the whoosh, they're all back to break even. And now look at the market climate overall, the sentiment out there. What do you think those people are thinking right now? Anyone who got stuck with this stock is now getting close to break even, and given the market climate, they're going to be thinking, I think I'm just going to, here's an issue that I'm going to get rid of. So, it's got resistance at 13.5 to 14. So, but in the meantime, it's also got support here at 12, and if it can continue to build out, so be it.
Okay.
Harlan, we've got Mr. Soul there in the chat here, and he's making a great point here right now, saying that margin calls are a big problem here right now. We have been on this extended bull run for 5 years, and there's a lot of people who are sitting on margin. They've got their portfolio maxed out, margined out, and as this market continues to drop here, do you think margin calls are starting to become an issue?
I think you're blowing a lot of those people out of the water. When you see these opens, this overnight risk, like you mentioned, like this, it's instant margin calls. So, those people are all getting blown out of the water.
So you think that might be another reason why we continue to have sustained sell-off pressure here, because if you're getting margin calls, these people got to come in at these opens and sells, and maybe that's why we're seeing these huge vacuums off the open and this huge selling pressure at 9:30 when these stocks open.
I'm sure that's part of it.
That's
Wouldn't
just
surprise you.
Yeah, because we were talking like Disney opened and fell 4 points in the first 2-3 minutes of trade, and if you don't have the liquidity there, and if you have people with margin calls there, I never even thought about that. Those people are just going to be sent. Those orders are going to be sold right at the market there when the market opens. What do you think about that, Joel?
I mean, it's definitely. What about everyone that got caught up in that rally yesterday? At near the end of the day, thinking, well, we bottomed, going to be green. We were green for most of the night. So, yeah, I mean, that definitely, that's the thing that probably happened yesterday, probably happened again today. Once again, you just have to pick your spots and, your levels and, be taking, probably in this kind of market, you probably need to trade a little bit smaller and expand your stops a little bit further.
And not look for instant gratification.
Well, that's it too. You've got to be very careful in this market. If you're coming in here trying to scalp pennies in this market, this is not the penny scalping market. That's why you see all the high frequency traders backing off in this market, because they come in and they're penny scalpers, and they're not going for pennies in this market. You've got to make more than this because the risk is just too high. If you're going in there looking for a 10-cent gain on something, that's crazy in this type of market.
Yeah, it really is. So, from that perspective, I mean, if you're looking for instant gratification, I don't know, at least in my world, anytime I've looked for instant gratification, it never appeared. It's when I'm never looking for it that it has always showed up for me. So, I think that Joel said it, you got to pick your spots, and you make your bed and then you sleep in it once you hit the enter button, and define your risks to the downside, scale back your trading. And if you have a little bit longer term horizon, which, in this kind of climate, because, sometimes you can only pull a rubber band back so far before it snaps. And when it snaps back, there's your cue. So, but then what happens when we finally do, level off here, settle down, emotions don't run rampant anymore, we get a handle on this, then what? Then comes the repair time, and that, looking at this market, gosh, 2020 to 1820 is 200 points in a month. That's huge. That's not going to get repaired overnight.
Not at all. S&P futures down, climbing back a little bit down there. Made a little stab at the low. Still trading down 25 points at 1822. So you don't think it's anything that that the Fed could do, or it's just the market just needs to settle down and find some support. You really don't think there's any specific news that can come out that could change things.
Well, much like we've seen on the downside, expect the unexpected, and believe me, there's been so much that has been unexpected here, obviously Ebola being a big one. You have to take it with a grain of salt, and you have to look at it from that perspective as well. Expect the unexpected. Somebody could say something and it's off to the races. So right now, when you have a market that's in this situation, it's going to be looking for anything it can hang its hat on. And you don't think a stock like Goldman Sachs on a good rip roaring number on a good day, wouldn't be up huge today? Of course it would. So, I just think you tread lightly here. At some point you're going to get a bounce, and it's just a matter of, is that bounce just going to be a reactionary bounce like we've seen yesterday, or is it going to be the real thing? I don't know.
You looking to short anything on rips here, and you don't take that 85% you got working for you and put it working to the short side?
No. For me, it's no pattern, no trade.
Okay. So you wait for your setups. In this type of market, you're still sitting back and waiting for your setups. And if your setup's not there, then you're just not making trades on Harlan.
Right. That's called being disciplined. And, you got to trade your plan and plan your trades. And, you can sit there and plan your trades all you want, but if you don't see them, there's nothing to do.
Right.
Okay, Harlan Pyan, co-founder of All About Trends here, discussing the current environment in the markets and urging caution as he always does. Harlan, thanks for coming on. We'll be talking to you again next week.
You bet. Thanks, guys. Take care.
Thanks, Harlan.